Welcome back to Primary Source China Investment. It was a busy week in the news, and we're going to get to some of that. Right now, we're talking about Show S. We're happy to be here. Peng.guo and I have been preparing, and we'd like to get right into it this week to talk about the headline news, which was DIDI. So we've been saying that policy and markets are inexorably linked since we started this channel. And this week, that came into a sharp focus when DIDI was banned from app stores and was taken off of WeChat. And this is a significant news, but it's not the why that's as interesting to us, but the signal that it sends. And the signal that it sends is a little bit different than a lot of the talking heads when they were talking about this on the news this week. They were saying, well, this is Beijing's revenge against companies listing in the US, or this is all about data security. I don't think that's the case at all. I think this is about regulatory power and dominance. When a garden variety ASHR listed company is suspended or a merger is blocked or otherwise fined in some way or another, it doesn't make international news, but it happens frequently. Regulators have to be in charge. And just because regulators have turned a blind eye to something in the past doesn't mean they won't change and move tack in the future. And I think that's what we're seeing now.
I think this is definitely not a new topic. It's since the trade war with the United States in the past 4 years, they talk about the national security is a decoupling process a lot. So DIDI make this such a big mistake. The first thing definitely is DIDI's problem. I mean, it's really not a management problem. Whoever the stakeholder, if you think about it, the company go to IPO, they definitely make the important decision. Those guys should be responsible for that. DIDI is a big company. They can afford any resources to figure out any legal or policy related questions. Unfortunately, they make such big mistake. Really, they get a strategic problem with that. Someone has to be responsible for that. Why we see the company running in China, actually, it's really not a China-dominated company. So the biggest shareholder, number one, probably like the SoftBank, around 20%. The second one is Uber, like the 12%. The China, whatever, they just might take the less than 20%. So the biggest stakeholder is really not a China-related things. I think that could be the reason to underestimate China regulations and how they handle the IPO things with that.
Yeah, I think this goes into the exact point I wanted to stress for our subscribers. Why do these companies list in the US? This is a huge question. It's not answered succinctly, so we're going to try to do it right here. There are 3 reasons. The first reason is listing requirements. A company like DIDI couldn't go public in China. And I don't want to go through a 20-page PowerPoint presentation, but just trust us. DIDI couldn't go public in China because, for one reason, they haven't had 3 years of profitability. So only in the US can you go public without having profitability. So that's the first reason. The second reason is this VIE structure. There's been a lot of talk about this VIE structure lately, and it's ironic because it used to be called the SINA structure, and because that was the first firm to use it. Without another 20-page PowerPoint presentation, the VI structure is an offshore entity that has a claim on the China entity, and then US investors buy into that offshore vehicle. This gets around a number of regulatory issues. And for 2 decades, since SINA, regulators have turned a blind eye to this VIE structure. Now, not so much. Interestingly, SINA decided to go private 10 months ago. So this VIE structure is really coming into focus right now after 2 decades. And the third reason, and I think this is your point, Peng.guo, is liquidity. If you want to have liquidity in US dollar, you need to list on a US exchange, because if Uber or if SoftBank gets tons and tons of renminbi, it's going to be very difficult to get that out. So those are the 3 reasons that these companies choose to list on a US exchange.
That's right. I totally agree with that. I think I want to just add some point. So obviously, so overall, if you see the China VC market, foreign investors are very active.
Yeah.
So all those investors, why they exit, the main exit strategy is really like the United States. So that's why they want to go to the United States. Another one is China and the United States have totally different regulatory background and logic. So that means they check whatever IPO companies, they have very high requirement. For example, they ask you provide the bank account for the senior management. So they worry about the inside transactions with the different people. So they know they really want everything transparent and them. But in United States probably don't have that. The United States more focus on the accounting related things, and China, I think personally, I think it's more restrict or higher requirement for the IPO companies.
Yeah. The final point here is going forward, foreign investors looking at China stocks are going to have to be more focused. They're going to have to understand what they own. Because right now, as we're recording this, there are 250 China-based companies listed on US exchanges, representing more than $2 trillion US. So if those companies are going to go private, go back and list in Hong Kong or the mainland, investors that are looking at ETFs as an investment vehicle for China, as a proxy for their China investment, have to be very focused on what those ETFs are holding. And in the next part in capital markets, we're going to get into that and show exactly what these things are holding and maybe a strategy about how to get the returns and watch out for the downside.
That's right.
So for capital markets, we're going to bolt on to what we just talked about in terms of where companies are listed and what that means. So we've covered a number of these ETFs in the past. So as a refresher, we're going to talk about 3 ETFs today on the equity side only. So the first one is ASHR, and this is the A-share ETF that tracks the CSI 300. This fund invests in the largest companies that are listed in Shanghai and Shenzhen. And as we've seen before, 2 of the top 10 are Baijiu companies. So you're going to get a lot of Baijiu. You're going to get a couple of financial services companies as well. And these are companies that are listed on the mainland, so-called A-shares. The second one that's interesting is EWH, which is all Hong Kong. And this fund is only Hong Kong entities. It's cap weighted, and you're going to find a lot of financial services companies. And those financial services and insurance, there's AIA is the biggest holding there. So we're going to put up a list of the top 10 holdings and the sectors as well. And the third one, which was interesting today, is PGJ. And what this is all China-based companies listed in the US. This is where you're going to find those high-flying names. You're going to find the Alibabas of the world. You're going to find the Tencents of the world. But you're also going to find 2 electric vehicle manufacturers as well. So this is what we're looking at right now, because if some of those companies are going to relist back on the mainland, you're going to get a smaller PGJ and a larger EWH and ASHR, for example. So great. That's a lot of brain damage for the average investor who's just looking to allocate 5%. So what can you do? And I think peng.guo has a solution that we've been talking about a lot, which is an uptrend on the index. And maybe peng.guo can go into that a little bit.
Sure. I think China market is they get a higher volatility. So everybody knows that and make the easy analysis. And overall, no matter the China index or US ETF, China ETF or Hong Kong product, you will see they're pretty much in the high related. They get a high correlation. And so that's really makes us is easy. So whenever the major index or major the China market get in the uptrend, it might be a good opportunity to hold it. Otherwise, we just wait. So my suggestions, whoever interested in the China, number one is you have to listen the professional expert suggestions. So how to do that? And quickly, if these guys have no background with China and they have no experience to handle China related things, just ignore it. So that's totally misunderstanding and also not consistent. And secondly, really need to find the benchmark or whatever active manager who were able to handle the volatilities in China market. because it's a cable volatility is pretty much more than 20 years. So we can really get used to that and how to handle it.
So when you signal, just so people understand, you're going to hold during the uptrend, but when you see a signal where the uptrend is going to reverse or flat, you're going to move into cash, or what are you going to do with that money?
Yeah, just move to the cash and waiting for the next time to get in. For example, we all know that's a pretty much famous ETF, KWEB.
Yeah.
So this is a US-based ETF. From our signal, the China or the internet company, the uptrend stopped at the end of the February. So you can perfectly avoid all the DIDI or whatever risk if you do it. So if
what was the signal for that, peng.guo, when in February?
Yeah, we can talk about that a little bit. This is based on our experience. We based on the macro model, we both based on the risk model, and we both based on the technical model to doing that. Okay. So you have to. It's really like the top down. To do it. So top down is entire economy, and the middle level is a sector. So we don't need to go to individual company. And then good news is that we handle for all the sector indices, broad market indices. So whenever you make the asset allocation or want to invest in certain area, always stay in the uptrend in that sectors.
Yeah, I'm going to put the chart up for KWEB for everybody so you can see exactly what you're talking about in February. And I'm also going to put up the CSI 300 because we do talk about that a lot. And we do have a very simple way to invest in the CSI 300 in the US, which is through that ASHR. So I think those will be two charts that people can see very well. And I will put up the attribution analysis as well, because you have both of those strategies going back a little way, right?
That's right. And if you make a little bit deeper analysis, so you can easily to see like the CS 300, CS 500, as well as the KWEB. They all get exactly the same Sharpe ratio, 0.5. So that really means you have to.
It really means they're terrible. You can be. You don't have to be polite. It's terrible. 0.5.
But I calculated like the S&P 500, and that's almost like the 0.8, 0.9. Yeah. And Nasdaq is only one beyond the one.
Above
so
one.
That means that really means long only strategy works. So don't just simply copy long only strategy to China market. And but that's one you have to use in the uptrend market.
That's a great place to end it, peng.guo. That's very helpful, and I think these charts are going to be very illustrative for a number of our subscribers. So we're going to leave it there this week, and check us out, subscribe, reach out to us, tell us what we're missing, and we'll see you next week.
Great, thank you. See you next week.